Hello everybody, Ross Anderson here on Tuesday 31st of December 2013. It's actually New Year's Eve, and today I'm just going to make a short video regarding how I go about marking my charts up for key support and resistance areas. This is normally a ritual that I would perform on a Sunday morning, preparing for the week ahead. But since it's obviously the Christmas holidays, I don't open any new trades. All I do is assess what I've done throughout the year to see if there's any room for changing my trading plan. Please note, at this moment in time, I don't have a website or a blog. These videos are purely to help me become a better trader. I do think at some point in the future I will possibly have a blog, but at the moment I don't. First of all, we're looking at the daily time frame of the Australian dollar versus the US dollar. The daily time frame is my trigger chart, which is the time frame I trade the most, purely because I have a full-time job and this time frame suits my particular time frame in the way of spare time. I've been trading daily time frame now since 2003. So without any further ado, let's start. What we normally do first is go to the higher time frame, which is the weekly chart, and I'll start marking what I consider to be the most recent turning points in the market, with some horizontal levels. Now, as I mark this, basically what I'm looking to do is mark the most obvious points. Why the most obvious? Because most traders around the world will be marking the same points if they're obvious enough. That's not to say that there's not other support and resistance levels on the chart, but the more obvious they are, the higher probability that other traders around the world can actually see the same levels that I'm seeing. There are many things that make up key levels. Turning swing highs and swing lows, or multiple touches. That's what I'd do first anyway. I've marked on this level here, where we can see that the price has touched this level and rebounded sharply to the downside, and the same goes for this support level here. Once I've marked my what I consider my two key levels on the chart, what I try to achieve here is to contain the price between these two levels. So what I'm looking for is a reaction at these levels once price gets to these levels, whether it be support or resistance. I then go back down to my daily time frame. Then I will mark with a different coloured line some key levels, or what I consider key levels, on the daily time frame, but in a different colour. Just so that I know what levels came from what time frame. The chocolate coloured ones are from the weekly, the khaki coloured are from the daily. Now, when I drew this line on the support line here on the weekly, Once I move down to the daily time frame, that line can be adjusted to suit the most recent price action. I always try to incorporate the most recent price action purely because, one reason, Forex traders, unlike any other type of trader, whether it be equities or indices or commodities, Forex traders tend to have a shorter term memory when it comes to levels. So I always try to give the most recent price action the most significance. I will then put another level there, which I think could be another key level, but at the moment price is yet to get above this first resistance area here. I'm then going to move on to my euro dollar chart, go to the weekly time frame and start the process all over again. Now the most recent swing high, due to the fact that this one here's not quite formed yet, I'm going to place it here for now. Change the colour of that. Chocolate. The reason I try to make these lines lighter, or not so bold rather, is purely because that if it was a black or dark or red or blue, you wouldn't be able to see the wicks through the line. I've chosen a colour to make my lines a little bit transparent, so I can still actually see the top of that wick through the horizontal level. Now the other level I'll draw will be a level to the downside, which, as I said before, contains the price. Price action is contained between these two lines. I'll then move that back down to the daily time frame. As you can see, these levels do need adjusted sometimes. I try to give priority to the most recent price action, which is these levels here. As you can see, we've had 1, 2, 3, 4, 5, 6 touches to that level, which basically tells me that level is quite significant. Adjust the support level. Then I'm looking to draw some key levels of support and resistance on the daily time frame. Once again, change the colour to khaki. And from now, let's see if we can adjust that a little bit better. Well, that's pretty good there. We've got multiple touches there. Price moved lower on this doji candle here and touched it, which tells me that that level is good. This touch here just confirms that this level is holding. So what actually constitutes support and resistance? That's a question many people or many traders ask. There are various things that constitute support and resistance. I'm looking for major turning points in the market, swing highs, swing lows. I'm looking for price action to react to a certain price level numerous times. For me, it's got to be a minimum of 2 touches to even consider it as support and resistance. If you also notice the thickness of my lines, I use the thickest line possible with MetaTrader 4 purely because price as a whole, especially on the higher time frames, can vary quite significantly. You're not going to get prices touching to the pip on the higher time frames. I'm not saying you don't, but most of the time you will have a variance in price. So I tend to use a thicker line to catch as many tops and bottoms of candles as possible. That'll probably do that chart for now. Let's move on to the pound dollar chart. Once again, back up to the weekly time frame. Draw first of all the support line here, which is probably around about there. Change the colour to chocolate. Now, as you can see, at the moment we're struggling to find a resistance level on the chart shown. So what I tend to do is I'll zoom out a bit and try and find what I consider to be the next potential turning point in the market, or potentially breakout pullback level, which I think is roughly at the 1.6617 level. Now that's not to say that price will interact with that level, but at the moment that's all we have to go with. If price for some reason goes straight on through that level, I will then move it up to there, see if we get a reaction there. If not, we could be looking at these highs here, but for now that is the next level that price interacted with in the past. All we have to go with is past data. Once these levels are drawn, go back down to the daily time frame. As you can see, this level, the support level here, bears a fair bit of significance. If I was to move it down to this swing low here, I'm only really catching 1 point, so we'll move it back up to here to catch all these wicks here, assuming this candle here was a false break to the downside, which it was, because price then resumed to the upside with this large green candle. I will then look at my daily levels, which is there. Now, as you can see, once these lines are drawn, that doesn't mean they're written in stone, because price is always moving. But on a daily basis, or nightly basis rather, these levels, you can alter them to suit the new price action that's formed around them. That'll do for this video. As I said earlier, I don't actually have a website or a blog. I do intend having a blog sometime in the future, but for now this video is going on YouTube. But as I also said, what I'm trying to do with this is accelerate my trading. Instead of me looking at charts basically and just acknowledging the levels are there, I'm making a video now so I can actually speak and interpret what I see on the charts to hopefully imprint then these as memories on my mind, rather than just acknowledging the fact they're there. So that'll do for now. Cheers, goodbye.